Good afternoon, everybody, and thank you for joining us today. I'm Christina Fox, the CEO of TechAlliance of Southwestern Ontario, one of 17 regional innovation centers in Ontario. And we say that TechAlliance is a place for dreamers, doers, and world-changing ideas. We are certainly committed to innovative companies who are launching, scaling, and competing in today's economic climate through our advisory services, our accelerator, and certainly experiences like these with partners like all of you. The business landscape is rapidly changing, both locally and globally. And so with that, I'm so pleased to be joined by our peers from two other regional innovation centers in Ontario, their client companies, and technology communities. Joining us are the teams from WEtech and Innovate Niagara, my peers, Jeff Chesborough, who is the CEO of Innovate Niagara, and Yvonne Pilon, who is the CEO from Windsor Essex, and their whole team. So welcome to you guys and your teams. Feel free to give a wave or a thumbs up or a say hello. So I absolutely love that we're collaborating across Ontario to bring this experience to all of you today and with our partners at KPMG. Standing up this webcast as quickly as we did definitely demonstrates our interest in supporting entrepreneurs and their teams on their own terms with the guidance that they require the most right now. In response to COVID-19, the Government of Canada has updated the work sharing program, and I think that's a major draw for many of you today. This provides employers and employees relief programs due to the unprecedented downturn in business activity. So we're so pleased to host work sharing in the business community in partnership with KPMG to bring clarity to your business from both a tax and a legal perspective and how you can leverage these programs during these turbulent times. We have two guests joining us today, but I want to do a special call out to Jim Cassidy and Vicky Ng from the London office, who has dutifully shared content with us and our team to make sure that entrepreneurs in our communities are prepared for the kinds of questions that they're asking. And it's because of that sharing of information that we were able to say, hey, if this is something that's really important to our communities and our clients and our entrepreneurs, let's do something together to provide some more cascading information. So thank you, KPMG. Before we get started, here's a couple of sort of housekeeping points. Everyone is muted. If you have questions, though, please submit them through the Zoom Q&A feature located at the bottom of your screen. Following the presentation, I'll guide some of the facilitated discussion for the Q&A, so please feel free to put questions in there throughout the presentation, and we'll do our best to handle and answer everything that comes through. This webinar will actually be recorded and will be available after the call. So there'll be about 30-minute presentation, a little bit of Q&A, and then you're back off to the races. So now on to our presentation. I'm very pleased to introduce Jenna, Kirk, and Ben Ling of KPMG. Ben Lin is a tax manager at KPMG, joining us from Ottawa, where he serves on the national response team, helping clients navigate through employment relief measures. And Jenna Kirk is a lawyer in the business law practice at KPMG, engaged in their labor and employment group in Calgary, and heads their business immigration group. So please join me in welcoming Ben and Jenna. Ben and Jenna, now over to you.
Thanks, Christina. And thanks to everybody for joining us this morning, or afternoon, I guess, for some of you. So we're going to go over the tax and legal considerations for business continuity today. I'm going to start off with the employment side of things and talk about some of the employment challenges and some of the new programs and things that we're seeing the government doing, as well as some of the businesses doing. So in response to the overwhelming number of EI applications that Service Canada has received over the past 2 weeks, and they expected that to reach somewhere around 2.5 million applications, Canadian governments at all levels have been working hard to come up with ways to support individuals and the economy. Similarly, companies have also been exploring options to support business and staff. While we all know that the current situation is temporary, there's really no way to know exactly how long temporary really is. So many businesses are being forced to adapt to a new way of life. Many of the provincial governments have now issued lists of what essential services are, which has forced many businesses to shut their doors in order to slow the spread of the current pandemic. Many of us have been working from home for the past few weeks where possible, and are learning about the joys and the struggles that come with that. However, an important consideration for employers who are embracing the remote work options is to ensure proper policies are in place and performance review plans are clearly explained to employees to ensure productive remote work. Clear guidelines and structure will make it quicker for employees to adapt to these changes. Where businesses have been allowed to remain open, social distancing and other requirements have been mandated. Many businesses have also seen a reduction in work, which in turn means reduced hours for many employees. While a unilateral change to an employee's hours can sometimes lead to an employee claiming constructive dismissal, given the current circumstances, this is unlikely to occur, and the risk can be further mitigated by taking steps to assist the employees facing reduced income. While some employers have been able to maintain their employees at full salary despite reduced work, most cannot. Consequently, the work sharing program has become one of the most popular benefit programs that Service Canada offers for employees. While I've been assisting employers with accessing this program for many years, most people are only hearing about it now. Under the work sharing program, you're not laying off employees, but you're sharing the available work between employees who form part of a work share unit when there's a decrease in business activity. Each unit includes at least 2 people with substantively the same role within a company, and each unit agrees to reduce their hours equally between 10 to 60% reduction while their employer recovers. They would then receive EI payments for the hours given up. This is not a top up to an employee's full salary. If you reduce an employee from 5 days a week down to 3 days a week, they will receive EI for the 2 days of lost work. The maximum EI an employee is eligible for currently is $573 per week, and therefore in this situation, an employee would receive their wages for work performed, as well as $230 from EI. The work sharing agreement can last between 6 to 76 weeks, so that's a maximum of approximately 19 months, and it is intended to be used to eventually bring the employees back up to 100% of their hours. For employers who are paying wages for work performed, whether remotely or otherwise, the federal government announced this week the Canada Emergency Wage Subsidy for businesses of all sizes, including nonprofits and charities, which have seen a 30% decrease in revenue due to the effects of COVID-19. It will cover up to 75% of an employee's paid wages for the first $58,700 or $847 per week for a period of 3 months between March 15th to June 20th, and it is retroactive. More information on how an employer can show a 30% loss is expected to be released today. We were all hoping that it would come this morning with Trudeau's announcement, but there's a further announcement that is supposed to be coming in a couple of hours. And as with the work-share program, it is likely that the government in many cases will accept an employer with very few questions at this stage. However, it's very important that these programs are properly applied for and adhered to, as they're likely to be reassessed in the future when the government has more time to do so, and specifically come tax season next year. The federal government has already announced that there would be consequences and fines for anyone abusing the system, and anyone who can continue to pay their employees should. So you want to make sure you qualify for these programs and are using them correctly before you start. Wage subsidy is obviously only for situations where work has continued. In situations where the work isn't there or forced closures have happened, unfortunately other considerations have to be made. One question I get a lot is, can we even do a temporary layoff? There seems to be some confusion around whether this is even legal. The answer is yes, an employer can always do temporary layoffs. The risk is that if temporary layoffs have not been contemplated in employment contracts or company policies, you do risk an employee claiming constructive dismissal. You do not need to give a notice period for a temporary layoff due to the current situation, but you do need to provide written notice. In Ontario, temporary layoff is a maximum of 13 weeks in any period of 20 consecutive weeks. However, if you continue benefits or provide a financial benefit of some kind, this can be extended to up to 35 weeks in a period of 52 weeks. If it extends this, it becomes a termination, which comes with termination pay. One of the ways that you can give a financial benefit is through the Supplemental Unemployment Benefit Program. Normally, if you were to provide a financial benefit to an employee who is on EI, that benefit would actually reduce the amount of EI that they're eligible to obtain each week. If you register your policy related to that financial benefit, it does not affect the employee's EI amount. One caution with this is that the policy becomes a binding contract between the employer and Service Canada, so it's always important to have it reviewed before you submit it. If you do have to proceed with ending someone's employment contract, we can always help you to prepare the documentation and give you guidance as to how to do this while remaining sensitive to an employee situation, compliant with the legislation, and mitigating risk. In situations where there are fixed length contracts, you may be required to pay the balance of this contract. There's also still common law, which comes into play, so common law severance period. I've had a number of employers say to me that they don't think that they have to pay common law anymore given the current economic situation. However, courts would likely not look highly on companies which take advantage of employees during this situation either. So it's always important to know what your statutory and common law requirements are. And always get a release signed. I'll now turn over to Ben to talk about tax relief measures.
Thank you, Jenna. As we continue to live through these difficult times, we're here to help you navigate some of the tax reliefs and financing programs that you might be eligible for. First, I'm going to discuss the extended tax filing and payment deadlines that are announced recently by the government. For corporations, any return due after March 18, 2020 and before June 1st, 2020, the deadline extended until June 1st, 2020. For a taxation year ending on December 1st, 2019, the filing deadline is still June 30, 2020, which is 6 months after the year-end date. Any balances and installments under Part 1 Income Tax Act that are due on or after March 18, 2020 are now extended to September 1st, 2020. Currently, there is no extension for payroll remittance. Any payroll deduction must continue to be remitted on time. For charities, any Form T3010 that is due or after March 18, 2020 is now extended to December 31st, 2020. Next slide, Jenna. So the government also announced tax relief measures on indirect taxes. Taxpayers will have until June 30, 2020 to make the following GST and HST payments. If you are a monthly filer, remittance collected for the February, March, and April 2020. If you are a quarterly filer, remittance collected in the first quarter from January to March 2020. For an annual filer, the GST, HST return or installment that are normally due in March, April, or May will also be extended to June 30, 2020. Please also be noted that currently there are no extension has been granted to the filing deadline, so any GST, HST returns still need to be filed on time. The exemption threshold of employer health tax is increased from $490,000 to $1 million for any employers with a total annual remuneration of less than $5 million. This change is retroactive to January 1st, 2020. The next part is the deferral of any employers that covered by Ontario's Workplace Safety and Insurance Board will be able to defer payment of premiums for 6 months. This means that business can defer premium reporting and payments until August 31st, 2020. No interest will be accrued on outstanding premium payments, and no penalties will be charged. Also, for a 5-month period between April 1st to August 31st, 2020, penalties and interest will not apply to Ontario business that miss any filing or remittance deadline under certain provincially administered taxes. This include employer health tax, fuel and gas tax, insurance premium tax, etc. I know that I've provided with you lots of data on these 2 slides and might be a little bit confusing. Also, this is not a complete list of the tax relief measures currently available. So please reach out to us so that we can help you clarify any questions you may have as we get through these uncertain times together. Another thing that needs to be mentioned is that as many employees are now required to work from home, with employers signing off prescribed form T2200, the employees could be able to deduct certain home office expenses against their employment income upon filing their personal tax for 2020. But keep in mind that certain conditions need to be met to claim home office expense as an employee. The Business Credit Availability Program is commonly referred to as BCAP. This program will allow the Business Development Bank of Canada, BDC, and Export Development Canada, EDC, to provide financial support largely targeted to small and medium-sized business that are experiencing cash flow challenges. Currently, there are 3 main programs available. The first program is an interest-free loan of up to $40,000 provided to small business and not-for-profit organizations. This program will provide up to $25 billion to eligible financial institutions so that they can provide small businesses the operating capital in the form of line of credit to pay for their rent or other operating costs over the next couple of months. To qualify, these organizations will need to demonstrate that they paid between $50,000 to $1 million in total payroll in 2019. Repaying the balance of the loan on or before December 31st, 2022 will result in a loan forgiveness of 25%. The second program is New Loan Guarantee for Small and Medium-Sized Enterprises. This program will be federally capped at a total funding of $20 billion. EDC will provide guarantee to financial institutions so that they can issue new operating credit and cash flow term loans of up to $6.25 million to small and medium-sized enterprises. These loans will be 80% guaranteed by EDC and needs to be repaid within a year. The third and final program currently available under BCAP is New Co-Lending Program. This program will also be federally capped at a total funding of $20 billion. Small and medium-sized enterprises can get support through this program that is funded by BDC together with financial institutions. Eligible business may obtain incremental credit amounts up to $6.25 million through the program, which will be risk shared at 80% between the BDC and the financial institutions. If you have any question regarding to these financing programs, please feel free to reach out and we can connect you with our financing advisory team to further assist you. I know this is a lot to digest, and the learning curve is going to continue as the governments implement more measures to assist Canadian businesses and employees. So we're here to support you and to work alongside with you. Christina?
Thanks, Ben. Ben and Jenna, that was really terrific, synthesized information, and probably just enough information for today, particularly as we know that there's an announcement at 2 p.m. today that could provide a little bit more information as it relates to the wage subsidy. What I really do like about the content that you provided is that there was quite a bit of detail about it, and it did prompt a couple of questions. So I'll take a couple of questions from the Q&A spot. So if you have a question that you are still thinking about, go ahead and pop it in there. And I'll start with the question of, will these slides be available? The beautiful thing about this is the recording will be available, and we'll send it back through Eventbrite as part of our thank you note and our follow-up. So you'll have access to the presentation through the recording. We'll also include both Ben and Jenna's contact information to support their interest in chatting with you one-to-one where you need that. Another good question that's come in is regarding work sharing program. Does this apply to both salaried and hourly workers? Jenna and Ben, who is best to take that question?
I'm happy to take that question. Yes, it does. It applies to both. The individuals that you put in the work-share program, if you put them in together, like salaried and hourly workers into one work unit, you just have to make sure that they were working substantially the same number of hours. So you can't have a work-share unit where somebody was working 37 hours, another person was working 10 hours as an hourly person. So they still have to have been working substantially the same as the other full-time or part-time individuals if they're put into a work group with them.
Okay, thanks, Jenna. Another question is, if we lay off staff and bring them back at 50%, can they claim the income and receive EI still for the difference?
So Workshare does allow you to bring back people who you have recently laid off and include them within the Workshare agreement. So they're included before you submit the application for Workshare, you include them on the list of individuals that you want to be included in that Workshare unit. And then yes, you can bring them back at 50%. So it can be anywhere from that 10% to 60% reduction. So if you have a person who works 5 days a week, that's being reduced a half day down to just working 2 days a week. So anywhere between that 10 to 60% reduction, you can bring them back and have them get both their wages and EI. You do have to make sure that they sign off on the Workshare agreement before you submit it as well. So they do accept electronic signature, and that's the way we've been doing most of the applications right now, just because a lot of people are at home or just not able to meet to sign the documentation. But yes, you can bring back people who were previously laid off. If you have a Workshare agreement already in place and you want to add new people, though, you do need to get approval from Service Canada.
Okay, thanks, Jenna. The next is for the 40,000 K interest-free loan. Is payroll requirement based on gross wages only, or all costs associated with payroll, including benefits costs?
This I need to check into the details, but there is another details on top of that is this. The threshold is not only applied to the single corporation, it's also based on all the associated corporation.
Okay, thank you. For the emergency wage subsidy, in addition to the previously announced temporary wage subsidy, so is it sort of a stacked subsidy, or is it the same or something different?
That is the same, they just changed it. So when it was originally announced, the temporary wage subsidy was supposed to be 10%. There was enough complaining about how that wasn't going to do anything that the federal government has decided to increase it to 75%. They gave it the title Canadian Emergency Wage Subsidy. So the temporary wage subsidy no longer exists. It's just the Canadian Emergency Wage Subsidy that we're working with now.
Okay, thanks, Jenna. And do we apply for the BCAP via our small business advisor at our current bank, or how would you recommend that be done?
Yeah, and also notice the next question is also related, is where do we apply for the loans? So the first step, reach out to your financial institutions, your bank.
Okay. And can you have more than one unit in Workshare within the same company?
Absolutely. We normally when we submit an application, we normally have a number of work-share unit groups in with the same application. It just makes it simpler to submit it all at the same time. You get the same officer reviewing the entire package, and then they kind of have a better idea of how your company is structured in order to approve that application. You just have to make sure that you have appropriate forms for each of the work-share unit groups, because you are required to set up an employee representative if you're non-unionized. If you're unionized, you already have one. But if you're non-unionized, you set up an employee representative, so you need to have their information. And that representative can be different for each different work unit group. You can reduce the percentage differently based on the work unit group. So, you know, if your admin staff is only working at 60%, but you've got other people working at 80%, you can do different work unit groups in order to make sure that those percentages are appropriate. So absolutely you can.
That sounds good. I mean, a little bit less red tape and sort of one application altogether. Yeah. Do payments to contractors count as payroll for the purposes of CEBA?
I think I can take that over from Jenna, if you're okay, Jenna.
Yeah, please do.
Yeah, I think that the first step is you need to differentiate if the person you made a payment to is considered to be contract or employed. So if it's in the context of contractor, not employee, then it would not be considered as payroll expense.
Okay, thank you. And perhaps this lends to the next question. Can you share any information about self-employed people? So for example, somebody who is running their own small business without employees, and they're wondering whether or not this can apply to them.
Yeah, sorry, Jenna. Okay, I can also jump into this one. So currently, Jenna already mentioned that one of the program out there is available to self-employed taxpayer is the Canada Emergency Response Benefit, CERB. So that one is definitely eligible. And for the other case, if you are normally registered, even as a self-employed, you register for EI benefit, then if you meet the other criteria, you might be also eligible for like one of the traditional EI benefit, which is the sickness benefit.
Okay, maybe a follow-on question. Can a co-owned business, co-founded business, use the work-share program for the owners if they are the only ones working at the business during this time?
So work-share actually restricts any senior management level or anybody with over a 40% shareholding in the company from being part of a work-share unit group. So unfortunately, they wouldn't be able to. I have dealt with individuals who co-own a business and there's not enough work for them. So one person continues to work and the other one actually applies under the CERB and obtains that $2,000 every 4 weeks for the 16 weeks. That is an option for those individuals.
Okay. Thank you. So do you know if the sort of forecasting, if the 75% wage subsidy can be used for when the small businesses opens or reopens if they are currently closed, as long as it's done before June 30th?
So yes, it is supposed to be for any wages paid between March 15th and June 20th. So if you're closed currently, but you can show that when you reopen, you meet that 30% reduction that's required, yes, they will cover the wages for those as well. You don't have to be currently open or one of the essential services that are listed. As long as you're not mandated to be closed, if you can be open in the future, then yes, you will be eligible.
Okay, and does work-share work for commission employees? And if it does, how so?
So there's nothing specific with commission on a work-share. Typically, sales individuals are not included on a work-share, and those are the ones who usually have the commissioned salaries as people in sales. We have done applications for people who are in sales groups where the reason that they don't have the work available is because, like in today's situation, the people who they would sell to are mandated to be closed. So in those situations, we have done that for sales individuals, but they will not usually cover commission. It's only the actual salary portion that they will look at and cover.
Oh, wow. Okay. I can appreciate that's going to be difficult for some Canadians for sure. Yep. Does Service Canada provide a work sharing agreement to employers for employees to sign?
So there is a form online, and it is an Excel spreadsheet. You pull it, you write down the employee's name, their position, and then you sign, and then you have the employee sign that. As well, after the employer has submitted the application, there is a form that they have to fill out with the employee's SIN number and other information, so that they can actually on the back end get registered for it. But as far as an actual agreement, that's all left up to the employer. That's something that we generally help employers draft, is both the work share agreements as well as the supplemental unemployment benefit policies. Because once you've agreed to do something with Service Canada, they're fairly strict on making sure that you're following it. Once you've applied through Workshare and registered your program through the sub plan, you should expect at least once during the period of life of that program to be contacted by Service Canada and have follow-up done on it. So you do want to make sure that you know what's in your policies, that it's drafted carefully, and that you can live up to all the agreements that you've made.
Okay, thank you. And just Jenna, you referenced that form is available online. Are you able to detail, even to send that back to us, and we can send it out with a follow-up email?
Absolutely.
Okay. A couple more questions here. Where can we access the details of the requirements on payroll costs for the interest-free loan?
Right now, the information was announced on the Finance Department of Finance official website. So to get the more details, I think, like I mentioned, you have to reach out to the financial institutions, the bank, because so far we haven't been able to gather more details on that.
Okay, thanks, Ben. So another good question to confirm, they changed the wage subsidy from 10% to 75% and added the 30% decrease in revenue. I think the answer is yes, but
Yes,
I'll leave
that is correct.
Yeah. Okay. Similar to another question, but is the wage subsidy available for a small corporation where the sole employee is also the owner with a revenue loss?
Ben, do you know the answer to that one? I'm not sure. I know that they said they've
So
included all small and large.
yes, so we still have to see the legislation amendment on that, because from the first the enacted act, it actually defined the eligible employer to be a certain type of entity, which needs to be, if it's incorporated, needs to be a small CCPC. Well, so if your situation is self-employed, then I wouldn't say that might be your case. But since we have seen a significant change on this measure, so we have to look into it, see if the finance is going to also update the eligibility for the employer.
Okay, the next question is a longer question, and even to preamble a little bit, you know, some of the entrepreneurs that we have been in contact with, and I know our friends at WEtech and Innovate Niagara are in contact with, they're talking about things like long sales cycles and annual recurring revenue. So with that in mind, keeping in mind that the federal government hasn't yet released all eligibility information around the 75% payroll subsidy, in a business that regularly bills for monthly services, we may not show a 30% dip in revenue. However, we're concerned we will not be able to collect on these billings despite the services being rendered and consumed. We may not determine that these accounts are uncollectible for up to 6 to 12 months later. Do you feel that and of course this is, you know, a guess and taking a guess at what the potential is, but do you feel that there will be some allowance for businesses in this position on the go forward?
So because this is now going to be an application through CRA, previously when it was just the 10%, they had said you could do a calculation and withhold that amount from your tax remittances, and that was how the 10% was going to be essentially given to employers. Because this is now an application through the CRA, I can see that you would likely be able to make submissions to that effect. You'd want to make sure that your application is very strong. It's, you know, it's something that we can also help you draft, is your application with submissions showing the reasons why you feel you should fall under this new legislation, and give some of the financial background showing that. And even if you could show like normally how many you couldn't collect on or had to go to collections and things like that, and then exponentially determine somehow what you expect to be the case this time, remembering that they're likely going to reassess this at the end of the year, so they're likely going to give you more leeway now, knowing that that they can always audit you and come back and find out if that number did drop the way you thought it was going to. And if it didn't, you're likely to have a clawback on the amounts that were paid to you. So that's just something to be aware of, because it's not going to be a situation where you get it and, oh, I've tricked the government, even if it's accidentally, they will be looking at this again. So I could see some flexibility for sure in that. And even if there wasn't, we would find ways to make submissions on it anyways, to see if we could get an officer to come around to that. Because they're learning too, like the number of Service Canada officers and CRA officers that I've talked to in the past 2 weeks, who are all very confused at all the programs coming in, because they usually don't have more details than we do.
Okay, that's good. And I think it might actually answer the next question. It was a follow-on question of what if the reduction in revenue is under 30% in 1 month, but not for the following month, referring to the wage subsidy. And certainly the question comes with the caveat of, we know that you might not have the answer to this, but it sounds to me, Jenna, like when you submit the file, it'll be something that is ongoing. Yep. And they'll have a look at it, further down the road.
Well, even like CERB, where you have to do monthly reporting, that is the case. There might even be monthly reporting that you have to do or something like that as well. And it is up to 75% of the wage. So there might actually also be a reduction that you see if you found that you've fallen outside of that 30%. We're not sure yet.
Okay. So just a quick check on time. It's 1:40 p.m. There are 8 more questions that are in the queue right now. And so what I will do, because you're answering them pretty quickly, thank you, is I'll go through those remaining 8 questions, and I just won't take any more questions in the Q&A box. For the 75% wage subsidy, is the employer required to pay the remaining 25% of salary?
So what has been announced is that where possible, an employer is supposed to pay the 25%, and there will be, where they don't, they will have to provide evidence and reasons as to why they cannot pay that other 25%. Okay. So hopefully we'll get some more information on that right away too.
Awesome. Okay, and then are owners that actively work in a CCPC that has been mandated to be closed eligible for the 75% wage subsidy?
Yeah, I can answer that one. So the wage subsidy is only available for the business still running. So which means you're still paying your employee the payroll expense. So the answer is no if the business has been shut down and no payroll deduction has been incurred.
Okay. This is a good one. Are there any examples available online yet of how to calculate or apply the 75% wage subsidy? And maybe further to that, how is the 75% subsidy going to be collected by employers?
That we don't know yet, and that we're all waiting for, because I'm not sure if it's going to be a portion of the 75% which is withheld from tax remittances, and a portion that maybe comes in, a line of credit that you draw down on and have to provide evidence that you've spent it on wages. We're really not sure, and that's between that and how to calculate that 30% reduction are the 2 biggest things we're looking at hopefully having clarified today. But there's no indication whether, if it's a cash injection or what it's going to be yet. So
yeah, okay, that's good to acknowledge that. One of the questions is sort of like A or B scenario. If we recover 75% of the wages, is there a benefit to doing work share? And then how do we decide which way to proceed? So good question.
It's a really good question. One of the biggest things with this wage subsidy is you have to be paying wages for work that's being performed. So if you have a reduction in your work, you can't just have everybody at 100% and paying them with this 75% wage subsidy for doing nothing. So we've generally been assisting employers with doing these work share applications, as well as having them be prepared to apply for this wage subsidy as soon as it opens, because there's no restriction thus far on you being able to do both. And there may, at the end of the day, be some sort of proof required that you had the work to actually employ these people. So, I think if they found out that you had a bunch of people at home doing nothing and you were just using this amount to pay their salaries, then there would definitely be some serious consequences to that. People who don't have work to do and who are laid off are supposed to be using the CERB. It's there for 16 weeks for them to use in between March 15th and October of this year. And that's what's supposed to be used if the work isn't there. Wage subsidy is supposed to be used for people who are doing work and employers who have work ongoing that just need help during this time because, maybe the employees aren't there, or maybe they aren't, getting the payments in like they used to. It's a cash flow issue as opposed to anything else.
I wonder if you could clarify too, where you make mention of sort of ongoing work. One of the questions I know that has come across my desk quite a bit is, for the wage subsidy, how do companies argue the 30% revenue reduction if those companies are project-based and don't have regular or recurring revenues, but they are project-based, and there was an expected project to come through or a forecast that may not happen now? Are you able to provide some support in that way?
I think that would just be part of our submissions when we're making the application, is showing not only documentation from prior years in the same period of time, but also, if we had to include communications with regards to ongoing things or upcoming things that we expected to happen, but we can show somehow that it's been impacted by COVID. I think that they would be fairly lenient and understanding of that, because everybody's company and business looks different, right? And so we're not all sitting in offices and working that way. Everything is kind of fluid. And so I think as long as you can make a strong argument in your submissions with regards to the way your company normally works and provide some sort of support for that, I think you will find leniency in a lot of this.
Thanks, Jenna. I think there's a question that is similar to a prior one, but I think they're looking for more clarification. If a small business reopens May 1st, for example, and they're running at full capacity from May 1st to June 20th, would they still qualify for the 75% wage subsidy, because from March 16th to May 1st, they were closed with 100% revenue loss? Is this a more customized, should meet with you kind of a question?
Yeah, I'm always happy to meet with anybody or have discussions with anybody for sure. But that is still something that we have to figure out, how the 30% reduction is going to look, because if that were the only requirement, then everybody going back to work would qualify, even if your business goes right back up to 100% revenue. And so that's not what the government is looking for. So I'm sure there will be other requirements, and whether that is, you have to wait a 1 month period before getting the money back for that period, just to show that you did drop 30% after coming back, I'm not sure yet, but that would be something that would seem likely to me that they would do, is just have it retroactive, but wait that extra month to make sure that you guys do have a reduction, because they're not looking to subsidize people who can pay for their own employees. They're trying to help out businesses that can't.
Okay, that's good. I mean, the timing of this webcast is such that we're, T-minus a few minutes away from the announcement. And so some folks on the line might be like, well, I don't know if that was a good use of my 45 minutes. What I really love about this is that you've put the baseline out. You've answered many of the basic questions. You've been really good to do sort of A/B scenarios. So serious gratitude for you, for both of you, for giving your time to that today. I think I'm going to put one more question in, and then I'll sort of wrap up with my thank yous, because I know we've got a few people that are dropping off the call. There is a follow-up question specific to the previous question about whether owners of a CCPC are eligible for the wage subsidies. So they're saying our business is closed, but we have committed to continuing to pay staff. What I love about that is that it's owners getting really serious about making sure that staff still have jobs and that they can still run their households and still have their families and contributing to economy. But some of those employees can't still work from home. Are owners also eligible for the wage subsidy if they are continuing to work?
So yes, if they're on payroll, if they are being paid through their payroll as well as an employee, then they should be eligible for that. I agree with you 100%. I think as an employment lawyer prior to this, most of the calls and conversations I had with companies was, well, we want to get rid of this person. How do we terminate them the cheapest? And now it's a conversion to, well, these are my people, and how do I support them through this? And, you know, what can we be doing? And I mean, that's been beautiful to see. It's, you know, I've said this a million times that, you know, Canada as a country is really just a small town community. We do try and reach across and help people where we can. And, you know, I've been through many floods in Manitoba and the Calgary flood and the Fort Mac fires, and people just always come together in these situations, right? And this is no different. And it's great to see. And I'm happy to like send out my email address to everybody. If you have further questions, I'm happy to answer them. I'm happy to have calls and talk you guys through any of these things. I do a daily distribution email on all of the changes that seem to happen every single day. So I'm happy to include anybody who wants to be included on that. I'll also summarize the speech that's going to be given in a few minutes and send that out to people who want it. So, you know, we're just trying to give as much information as possible and be as helpful as possible right now for everybody.
And to that end, Jenna, I'm with you. You know, the fact that there's been this groundswell of people saying, you know, how do I help my people? This seems important to me. I would say that we certainly want to thank both you, Jenna, and Ben for joining us today. Our thanks certainly to Vicky Ng and Jim Cassidy at the London office, and certainly our partners, our Regional Innovation Center partners, Jeff Chesbrough and his team in Niagara, and Yvonne Pilon and her team in Windsor, Essex. Being able to have this many people on a call today, knowing that there's a big announcement happening in T-minus 10 minutes is really key. I also want to just express to the participants, you know, we hope that you stay well and stay safe. You will receive a follow-up email with the link to this recording so that you have the details from the slides. And I'm going to put it out there without, you know, any sort of commitment, but Jenna and Ben, we would love to have you back. And if there's a way for us to re-stand up this conversation in the next couple of days when more ideas are understood or the direction is understood from the announcement this afternoon, if there's that opportunity, but we will certainly include your contact information in the follow-on email. And so for those of you who are about to jet to that call, it begins at 2 p.m. And our friends at the Canadian Council of Innovators are hosting a conference call this afternoon at 4 p.m. with Minister Navdeep Bains to talk a little bit more about today's announcement. So I encourage you to look them up, CCI, and they're on Twitter, and that's where their information is. And I continue to encourage each one of you that are on the call today to continue thinking about your people, hook back into your Regional Innovation Center, whether that be in Windsor, Essex, Niagara, London, Sarnia, in that space. We are hosting webcasts like this across each of our organizations to provide information to you in real time based on the terms and the things that you need. Again, stay safe, everyone, and we'll talk to you again soon. Take good care.